I'd like to show you why knowing your why is the start of your journey. Without a strong why, it can be so difficult to reach your maximum potential. My name is Dr. Jason Balara, and every week I meet with real estate investors and mindset specialists that are taking action in order to build a life according to their own terms. We will break down what drives successful people and allows them to achieve at such a high level. If you are a professional wanting to break through, or simply someone that wants to hear an inspiring story, the Know Your Why podcast is made for you. Hi everyone, I'm Jason Balara, and this is the Know Your Why podcast. Today I'm here with Ryan Nunes. Ryan was the leading commodity derivative salesperson at Wall Street banks for 13 years. He transitioned to multifamily in 2019 and is a general partner in $64 million of assets and a passive investor in 3,195 units across Texas, Florida, Arizona, Georgia, and Ohio. He's the founder of Life Changing Capital based in Houston. And first, Ryan, I just want to say thank you for coming on the show today. Thank you for taking the time out this morning. I really appreciate it.
Jason, thanks for having me. I appreciate it as well.
Awesome. Can you tell us a bit more about your background? I know you were in Wall Street, but just kind of tell us your story. Let the audience get to know you.
Yeah, for sure. I grew up in the East Coast, did my undergrad at Georgetown University in finance and international business, and then joined a energy company in a management training program. As part of that management training program, I did my MBA on nights and weekends. So really learned about hustling. At one point in time, I was working full-time, doing my MBA nights and weekends. I was classified as a full-time student and was also a teacher's assistant. But as I was doing that at NYU, I was rubbing shoulders with a lot of people that were working on Wall Street, and I really decided that's what I wanted to do. So I took my energy background and transitioned to a commodity derivatives role on Wall Street. Did that for a number of years, 13 years or so in sales. So got to call on a number of CEOs, CFOs, treasurers of different Fortune 500 companies and private companies and help them manage their commodity price risk. And for real estate people, I kind of explain it as I help people lock in the equivalent of your interest rate, but for oil and gas. And over a number of years, I'd say probably the past 5 years of doing that, and there was a lot of changes in that market. It was very much a boom and bust. I kind of say that for every one real estate cycle, there's probably 4 or 5 commodity price cycles. So, a lot of ups and downs, and there was a lot of change happening. And so, thought about, this train is going to stop at some point in time. What else do you want to do? And frankly, got a lot of resistance in terms of a pivot. And people were like, hey, you're great at commodities, just stay doing that. And I said, no, I really want to do something else. It's kind of the halftime of my career. And it seemed real estate was something that generally is something that's easier to pivot into. But I also think it can be very much more difficult to be good at, because there can be lower barriers to entry. But fortunately, learned about multifamily, had no background whatsoever in multifamily, didn't know what a cap rate was, didn't know what NOI was, and transitioned, went on to buy 2 deals with 2 gentlemen, and then found my partner. And we bought 3 deals together, sold one, have another one under contract. And so it's been a great ride. We've all in all GP in 5 deals and LP in over 3,000 units. So really have seen the good, the bad, and the ugly of multifamily in the past 4 years or so doing it.
Yeah. It's a really interesting. I mean, a lot of my guests come. I think it's actually rare that someone is like, in college for multifamily real estate, right? That's not typically what happens. So people come from other career paths, and you're similar there. And so I think that transition period, because we have, I think, a lot of listeners that want to get into real estate and they're not sure how, and they're not sure about whether, are they going to LP, or are they going to go and be active? What's their plan? How did you mentioned that you got resistance. What were the first steps you took? And then, kind of we'll start there. And I want to talk about kind of that resistance that you faced.
Yeah, sure. So the first steps that I took were sitting down with people that were in the space. And a lot of that was, hey, who should I talk with? And who are kind of the quote unquote influencers in Houston or local Texas markets? And I would just get on the phone with them. I like to ask a lot of questions. So would just pick their brains and try and add value in any way that I could. A few of those folks I ended up investing with. So I think that was beneficial for both of us, mutually beneficial. But that really helped me understand, okay, what is this space all about? How have people been successful? What are the pitfalls? Um, I chose to invest passively, but then soon after, in more out of necessity, I needed to be a general partner for tax purposes. So there's some rules around depreciation and offsets, and through those offsets was able to get some sizable refunds from the IRS. But that was all because I was an active real estate professional and involved in as a general partner. In terms of the resistance, I think it was more around um, in commodities. It can be a little bit niche, and so people are like, hey, you're really good at that, you know those markets super well, you've been doing that for 13 years, just keep doing that. The resistance was less so on the multifamily side. I think people, to your point, are more open, and I think that's maybe what makes the multifamily space interesting, is that people come from perhaps different backgrounds, or the real estate space in general. I know that it was very helpful. My background in commodities and risk management and understanding markets and understanding when I felt things were getting overheated and kind of irrational exuberance, and also being able to have that data-driven aspect where we looked at probably 300-400 deals before we bought, or in the time that we bought three. So really being able to analyze and take a very institutional, deep analytics approach to the space, I think has been really helpful. And that's been a good carryover from my career in commodities.
Yeah. Yeah, I think you bring up kind of a good point. A lot of times the resistance is not from the people within the real estate space about you coming in. It seems to be a fairly, sort of open and welcoming community, I think, in a lot of ways. And it's oftentimes the people outside of that, the career path that you might be coming from, even friends and family. They're like, what, why would you switch? You've got a great job. You're making money, that kind of thing. That all these, and they're saying those things really simply just to, I think they're have your best interests at heart, but they don't necessarily understand the drivers behind wanting to make that transition, whether that be, sort of an uncapped potential within real estate, or maybe it's just a matter of, you you get so good at doing what you were doing in commodities that there was no more of that sort of growth or challenge that you can, sort of have, that gives people energy, right? Like when you're trying to do something new, it's kind of exciting, and you're learning and growing and within yourself. So, and interesting. I mean, I think that, there's also, and I don't claim to know a lot about commodities, but the two, probably there's a lot of like similarities and parallels as far as, kind of how you would approach real estate versus what you were doing prior to that. Would you agree?
Absolutely. And I think also more of the approach is that we applied a very deep analytics, and let's compete, let's be thoughtful, let's approach our asset management for pay for performance culture in terms of incentivizing the on-site team, and let's push vendors aggressively. I mean, just a very Wall Street type of approach into a very smaller type of pool of assets. So, and that I think has worked really well for us. And so I think that my partner also has a Wall Street private equity background. So, yeah, I think the two of us, it's been helpful, and it's resonated with our investors. And the deals that we raised for, they were all concluded in a day, in terms of our equity raise. So I think people have appreciated the risk management aspect, and that we're not going to do something stupid when we buy a deal.
Yeah. What talk about that, from the asset management side. You said that sort of incentivizing the on-site management. What are some of the tips and tricks you're using that you're kind of bringing over from the Wall Street side that and then implementing within your real estate asset management?
Yeah, so we typically when we'll look at the financials, we're on weekly calls, and we'll say, okay, what is the strategy? What are we trying to achieve, whether this week, this month, this year, this whole period, and then figure out how can we get our interests aligned with the on-site team, or their interests aligned with us, I should say. And we've done anything from one property that we owned in San Antonio, and we bought during COVID. And so there was eviction moratoriums. There was a lot of funds that were paid for rent relief. And there was some heavy delinquent balances that you just couldn't kick them out. One, because you're playing this game of, hey, if they stay, we're playing the rent relief game and rent relief roulette, I guess, of, hey, will they get accepted and funded? And then it'll wipe out their $13,000 balance. So we did get a number of checks that were that material. And so it was worth playing that game. And one in particular, there was a resident where at the last minute, it was like, we thought she was going to get approved and she didn't get approved. And our on-site manager, we said, hey, we are going to pay you, I think it was like $500 if you get that check. And so she became super focused and was, invited that person in. Hey, I have coffee for you, have snacks, come in, we'll work on the paperwork. And what ended up happening, there was just a few missing details in her application, and our on-site manager went and fixed those. And 2 weeks later, we got a $13,000 check. So that was huge because it was also during the sale process. And there's a lot of scrutiny on the delinquent balances, and to identify and say, this is our highest delinquent balances. It's spoken for. This is where it is. And we just got it approved and now it's zero. And so, those types of things have been really helpful. We've done a number of different incentive programs, whether a percent of collections, whether at closing we pay bonuses, whether we're going to look at actual versus budget and provide incentive bonuses against that, whether bonuses for if your new leases and renewals are at market, there's a different type of compensation for that. And so all of those things, we've also done, hey, if these maintenance projects get done by this date, we're going to give you a bonus. So it's been anything that's been really important to us. We felt that that's one area where our payroll is probably higher because we pay, I would say above market, for sure, above market, but we also expect above market performance.
Yeah. No, I mean, it's great. And I think though you may be, sort of paying above market, but even just in some of those examples you listed, I'm sure it's kind of making up for itself in terms of the revenue generated or savings on your expenses, however that, basically, if it's improving your bottom line, improving your NOI, who cares if you're paying more money to essentially increase the value of your property by direct, sort of direct effect, then it makes a lot of sense.
Absolutely.
You mentioned something that I think a lot of people will be interested in, myself in particular. You said, when you raise for these deals, it takes you a day. How does that come about? Because I think that's certainly not the norm.
Can you hang with me 1 second? I'm just going to adjust my screen. I just realized
Sure.
it wasn't HD. Is that okay?
Yeah.
Sorry about that. I was looking, why was it weird? And it wasn't. You looked very clear in yours, and so I apologize about that.
That's right.
Let's see. All right. Sorry about that.
No problem. No problem.
So do you want to just repeat your question? Is that okay?
Yeah, sure. I was just asking, you mentioned that when you're raising for your deals, when you're raising capital, that oftentimes you're fully subscribed in a day. And I don't think that's something you hear about, when people have been doing it for a long time. And even still, that's impressive. So Tell me a little bit about how that goes for you. I'd imagine with your commodities background, you said you were calling on a lot of, I guess high net worth individuals. So maybe you have connections in that area, but how does that sort of work for you?
Yeah, I would say that a number of the folks that have invested with us are people that I've worked with. And so they've seen my level of professionalism, they've seen the work product that I produce. And when they started asking questions about multifamily, they could see the deep thought and the deep analytics around the assets that we were acquiring. The presentation decks were very professional. And so I think that helped them get very comfortable. The thing that was surprising, frankly, to us was that a number of folks that were professionals, long-term professionals, 15, 20, 30 years of experience in commercial real estate also invested with us on our first deal. And I think they saw that, having looked at some of the deals they were either brokering or when they met with us, again, the deep level of thought and different perspective on multifamily, and saying, hey, these guys aren't just buying anything. They're really thoughtful about what they're looking for, what they want, their process and their strategy. And so a number of folks had invested with us in the first deal that we bought, which, again, the first deal, we were humbly thinking that, we may need to invest a lot more than we had to. And we were prepared to, frankly, put in, 80% of the equity or more if needed to close the deal. But we only ended up putting in, I think, 15 or so percent, and we cut ourselves back because it was so oversubscribed. But a number of folks from the commercial to professional commercial real estate world were invested with us, and that, frankly, meant a lot to me. And I think it was affirmation that, keep going. You have a different approach, and people see that, and people that are very experienced can see that. And so don't give up. It can be tough, especially when you're looking at 100 deals for every one that you buy.
Yeah. Yeah. It is a multifamily is challenging in that it's like you're doing a lot of work for maybe kind of what you might consider, some people might look at it as sort of infrequent wins, in the sense that, most people are not closing, 30 multifamily deals a year. It might be two or three. And so you're doing a lot of work to get those two or three, and then, you have to manage them for a number of years. So it's kind of it's definitely a delayed gratification and being patient, type of space to be in. But ultimately the wins for yourself and your investors can be very big. So that's where the appeal comes in. Excuse me. What is your investment criteria? What types of deals are you looking for? I know you have, kind of invested in a number of different markets, but what do you look for specifically? You said, you're very selective and have a different approach. What kind of deals are you looking at?
Yeah, no, that's a great question. I think from a macro standpoint, we look at demographics. So we want to see, one, that median incomes are 55,000 and up; two, that home values are, let's say, 250,000 and up, and particularly home values that are 2x the price per unit that the apartment's trading for. So that just shows that there's a good gap to home ownership to rentership. And then population growth. So kind of from a demographic perspective, those things are really important. And then if you zoom down from a micro perspective, for Texas deals or other areas, is it in a flood zone? We don't want to touch anything that's near a flood zone or that's flooded. We want to see true value add, and that there's something, whether, the first deal that we bought, it was 100% classic units. The guy had owned it for 25 years. And so that was a lot of low hanging fruit. We cut expenses, I think, like 70%. We increased NOI 132% by the time we sold. So, when you have many levers, whether on expenses, on income, to push, that gives you more operational flexibility and more avenues to drive NOI growth. So, if the cap rate is not strong going in, then why is that the case? And is it a true turnaround story? And is there a pathway to truly do that? I think those are the things that we like to see at just a face value. Um, and then from other perspective, we're very relative value, and that's kind of coming from the commodity side of, and this is priced this way. How does that compare versus our database of what's traded and our knowledge of what's happened in that market? And do we think that's good value? Do we think there's upside in terms of price appreciation? So that is one of the things that, having worked on a trading desk 13 years, everything was about value, relative value. This looks rich. This looks cheap. Why? What part of the curve do I like? What type of neighborhood do I like? How do I feel that this vintage should trade against that, and these attributes of physical properties? So those are the things that we just have a dialogue internally on. But I'd say at a high level, those are the criteria, and so the areas that we focus on are the Texas Triangle, and then we've looked at deals in Arizona, and so those are kind of the areas, but predominantly Texas Triangle.
Yeah, yeah. Yeah, fantastic. I mean, those are, sort of great, I guess, metrics to look at, when relating to the market. And those things are extremely important. So thank you for explaining that. I think that's a good thing for especially people that may want to become active in multifamily space, sort of really understanding some of those, the most important things that people look at when kind of approaching a market. Ryan, I'm going to switch gears here a little bit and go ahead and ask you the questions that I like to ask every guest. And the first one, based on the name of the show being Know Your Why, I always like to ask every guest, what is your why? What drives you towards success? You obviously made a pretty significant career change, and are successful in what you're doing. So what kind of keeps you going?
That's a great question. I would say a few things, particularly the why of multifamily is one. I was really looking for something that I could apprentice my children with, and being around assets. The skills that I've learned in multifamily, I can apply to any business. So, and then multifamily, I think so many people are into real estate because it is relatively easy to understand. There's a house, people need to live there, need shelter. They're going to pay rent, and you just have to keep that place full with good paying tenants and manage expenses. I mean, the business model is pretty easy to understand. I think for my kids who are 11 and 13 now, we've taken them to the properties, really apprenticed them and sat and explained to them what's happening when we go under contract with a property, what's happening when we're bidding on a property, what's happening when we're walking units and so forth. So say one, first and foremost, it's having something to leave to my children. I think two is really having an impact. For instance, last weekend, we had the church that I attend in Houston. They came out with about 10 or so church members, and they held a block party at our property. And that's amazing because I just get to be an intermediary or conduit of, here is an apartment community that's kind of a class B minus property. And here's a church that really wants to love on their own city. And so I just raise my hand and say, I know a lot of people that would love for face painting and jewelry making and pizzas, and just something that people that live at these communities might not get every day. And here's a group of folks that really wants to reach out and connect with these people, but might not be in their circle of influence. And so, because I know those, apartment communities weren't in my circle of influence before, but now that I'm kind of straddling both worlds, I get to bring those two together. So that's another aspect of the impact of people. And we can set the tone for our apartment communities and impact 152 families. And that's pretty cool. And then lastly, was just looking for something that had longevity. The commodity space, I would say before we went through kind of another commodity cycle in the Ukraine war, it was really looking like this could be the last few years of oil, particularly as we transition to EV, electric cars. And for real estate, as long as there's people on this planet, they're going to need a place to live. So I like that aspect, and I like the fact that there's a lot of different avenues and a lot of transferability in real estate. Where on the commodity side, it was pretty niche, and so I like having the opportunity and to learn about whether it's asset management, property management, acquisitions, dispositions, and then different food groups, i.e., office, retail, so forth. Just knowing that those kind of metrics, financial statements are somewhat similar, and so there's this opportunity to pivot and move freely. So that was also a huge aspect of my why.
Yeah, that's awesome. That's awesome. I think sort of the forward-looking nature of that on both a personal and professional level, the sort of forward-looking nature of having your kids involved, and what skills can you impart on them, for their future, but also just forward-looking as far as if you think the oil industry is not not going to be as robust in the future, then yeah, find something that is. And you're right, people are always going to need a place to live. Second question for you: tell us something about yourself that maybe isn't common knowledge, something just to let people know you better, a special skill, a hobby, whatever you're comfortable sharing.
Yeah, sure. So there's two things that take up a large portion of my week. One is I started a rock band at my kids' elementary, it's K through 8 school, and started that about 4 years ago. And we have kids all the way from 5th grade to 8th grade in that band. We have 10 kids. We practice on Fridays after school, and they perform probably 3-4 times a semester. I should say it's like three, yeah, roughly. And they play anything from Taylor Swift to Journey to Guns N' Roses to Beatles songs. So and that's been great. I played in a band in high school that it was just friends, and we didn't really have any parents involved to guide us at that point. And I find that with some coaching guidance, it's amazing what a group of people that have never performed together, it might not even be masters of their instrument, can do, and how strong the sum of the parts can be. So that's something that has been really awesome. And hopefully, I think it impacts the kids more than they let on. But and then secondly, I'm an Eagle Scout, and my two kids are involved in Scouts, and so I spend a lot of time. So Monday nights I'm with my daughter, she's part of the Boy Scouts, and then my son is on Tuesday nights, so an adult leader for both of their respective troops, which has been great. That's in Houston. It's one of the largest troops in the country, thriving. And so I spent a lot of time doing that as a merit badge counselor as well. So just a way to give back. I felt like there was a gap after I got my Eagle Scout until I was really able to give back, and wanted to for a long time, but just didn't have an outlet. So I was moving, but with my kids in the troop, it's a great opportunity to do that. So those are the two things that kind of where I volunteer my time.
Yeah, that's awesome. I love the band. I also was in a band. It's funny that you say not a master of their instrument. I was like, we were definitely not masters of any instrument, but it was fun. I mean, it was just such I thought such a bonding experience. So I'm sure it's great for those kids, and I'm sure that they're getting a lot more out of it than they might willingly tell you. So that's great, and good on you for doing that. When people hear this, where can they reach out to you?
Sure. You can reach me at lifechangingcapital.com. And some of the things that may be helpful for your listeners is I have 25 questions every passive investor should ask. That just goes through. And when I was entering the space, I honestly didn't know what questions to even ask. There were so many, and what questions would really get me to finding out if I should invest in this deal or not. So check that out if you're new to the space, or even just as another guideline for how to approach different deals that come across your desk. And then if you want to reach out to me, you can reach out to me through the website as well, lifechangingcapital.com.
Perfect. And we'll put that in the show notes. Final question for you, Ryan. What's a piece of advice you would give to someone who is looking to get started in real estate? How would you guide them to kind of start their career in that direction?
So I would say that there's a number of things that people say in real estate that aren't true. And people say, oh, you can never lose money in real estate. You know, buy real estate and wait. Those things I find pretty funny because I don't think they exist in any market. I think that's just the nature of capitalism and financial markets is there's risk and reward, and you're compensated for taking that risk and reward. So nothing is really risk-free. Except treasury securities, but those may find out come early June that those aren't risk-free either. So I would say ask a lot of questions. Don't be shy about asking a lot of questions, and approach things in real estate. You have to be really hungry, and you have to be humble. And humble is just asking a lot of questions, admitting, hey, can you help me understand this? I don't get it. And because everyone in multifamily and everyone in the world, if they're raising money, are going to tell you, hey, this is an awesome deal, you should invest in it. No one's going to come to you and say, hey, I don't know what I'm doing, this is a horrible deal, but please give me your money. So it's really important that you kind of have some wisdom about deciphering where you should put your money, because it is real money. It's not monopoly money. And as we're finding out, there's a lot of people that will lose a lot of money in the commercial real estate space.
Yeah, it's it is funny, some of those cliches that are out there. Just as far as it's a business. It's still a business. It's not like it's a very lucrative business, but you've got to do it right, and you've got to it's not a quick get rich scheme. So you do want to have someone that sort of operating well. Well, this is great, Ryan. Thank you so much for coming on the show today. I appreciate everything you've shared. I really appreciate your kind of approach to real estate and the things that you're taking from your background and sort of applying there. I think that's, I'm sure, very, very valuable for you and your investors and now for our listeners. So thank you so much. I do appreciate your time today.
Jason, thanks for having me on.
Yeah, absolutely. Folks listening, I'm sure you're going to get a lot of value out of this episode. Please go ahead and like, rate, and review the show. That allows us to get more great guests like Ryan. All right. Have a great day, everyone.
I'd like to show you why knowing your why is the start of your journey. Without a strong why, it can be so difficult to reach your maximum potential. My name is Dr. Jason Balara, and every week I meet with real estate investors and mindset specialists that are taking action in order to build a life according to their own terms. We will break down what drives successful people and allows them to achieve at such a high level. If you are a professional wanting to break through, or simply someone that wants to hear an inspiring story, the Know Your Why podcast is made for you.